applied maximum logic, I believe, along with the drafting committee members. And I'll try to explain. If not, I'll get back to you as soon as possible. And the third one is, let's keep the topic as much as possible relevant to this topic, because otherwise it will extend the sessions. It will take till 6. It's not nice for you, nice for me everywhere. And this is not the last one. There are a lot of sessions and there's overlapping. Probably it would have been better had returns been held before ITC than ITC held after returns. But tomorrow the big sir is coming because he's probably busy in Mumbai today. And he's the best man to do the job actually. So he will be explaining you returns better. I will be just touching because there are some provisions of return I have to explain before making you understand the issues of ITC. That's why. Let's start with it. The very reason GST came into place, as we all know, I've been speaking from 2006, is that seamless flow of credit, the cross-utilization of credit and all those things. So it's very important that we understand the schema of credit, and to start with the credit issue, we must be able to understand the concepts of credit. That is why we have explained the, let's go into the concept. These are all the, yeah. First line is the most easiest line you will ever have in the slide. Input tax credit means credit of input tax. Okay, it's the simplest line you can ever have. It's very clear. But the input tax is the most important thing here. We have to understand here that we are speaking about 3 laws in this situation. The Kerala GST law as far as Kerala is concerned, the central GST law and the integrated GST law. The 3 GST laws we are speaking about. So each law will have a different definition for input tax, but it has been specifically given. As far as input tax, generally you can define input tax as a tax paid by charged on a person for supplies made to him. Okay, if supply is made to him, a tax is charged on him. Okay, and he uses or intends to use it in the outward supply. Okay, and the word of in the course of furtherance of business, as explained by Nagendra Kumar sir yesterday, is always there actually. So this tax paid by him is very important, because as far as CGST law is concerned, the tax paid by him includes CGST and IGST. As far as SGST law is concerned, it includes SGST and IGST. And as far as IGST law is concerned, it is IGST, CGST and SGST. This law makes it enables us to cross-utilize the credit. Without this, we cannot cross-utilize the credit. This input tax definition is the one which enables the cross-utilization of credit very clearly. And it also includes tax paid on reverse charge mechanism. It is because the person paying tax on reverse charge mechanism has to take credit of it. That is why it has been enabled here. That tax paid on reverse charge mechanism is also an input tax. And inputs, there are 3 components normally which you take credit on. It's inputs, capital goods and input services. Inputs is any goods except capital goods. Again, the definition is there, which used or intended to be used for making an outward supply in course of furtherance of business. It is very simple, because if we define capital goods, anything else is inputs. Okay, and similarly service is also very simple, any service. Yeah, there will always be exceptions there and here which will be provided in the negative list that has been specifically mentioned below. Other than that, any service provided to a person, okay, used or intended to be used by the supplier for provision of outward supply on the course of furtherance of business. It's very simple here. Okay, input tax, inputs and input services, you don't have any doubt. Yeah, capital goods is defined very clearly here, and I think you will be explained. I'm not sure whether it has been done. The tariff headings are being used for GST. So any filing of returns and all will include tariff headings also. It depends on 2 and 4 based on the turnovers of the concerned person actually. So if tariff heading has got chapter 82, 84, 85, 90, basically machinery and electric components of that. If they are there, it is capital goods, pollution equipment. You can read all those things actually. It is very specifically taken straight from CENVAT credit rules and put up here. There's no change here actually, okay. But these goods, okay, if it is used in the supply of goods, has to be used in the premises of the person actually. That is very important. These goods outside, if a supply of goods is happening by the person, if it is used outside the premises of the person, it is not included in capital goods of the person. But even if it is used outside the premises for a supply of goods, only one exception is there, where electricity used for captive consumption, that too. Electricity may be generated outside using this machinery, whatever it is, but it should be used for the captive consumption. Then it is used as, it can be allowed as capital goods, even if it is outside the premise of the person. But for services, we don't have any problem like that. Any of these goods used for service provision, even outside the premise of the person, is included for services. Okay? All these previous list, whatever I told you, These can be used by any person and taken, and the tax paid on this can be taken as credit of capital goods. And yeah, the place of business is very important here. You please do note down it. The premises I told you yesterday, the last word is actually place of business. Place of business has been defined in this law. This is very important in terms of capital goods. Okay. And capital goods also include the three other things: motor vehicles for transportation of goods, transportation of passengers, and other components, spares, and accessories of motor vehicles. And these motor vehicles, not for any motor vehicle, it can be used only for supplying of services of renting. It can be used for transportation of inputs and capital goods, or it can be used for supply of couriers. Or similarly, in terms of passengers, it can be used for transportation of passengers, renting for passengers, and thirdly for motor training, driving skills training. Okay. Mainly because the main idea behind restricting this capital goods of motor vehicles only to these three issues is that any personal use or any private use should not be allowed for taking as capital goods. For example, if a MD of a company is there, he uses the vehicle to go to home and come back. That cannot be used as a capital good for the company. It should be used for one of these purposes actually. That is the main idea about it. This exceptions is very important here because we are speaking about any goods and any services. So except for these lists, except for the one that we are going to discuss now, every other services or the goods is included as inputs or input services. Straight away, there's no doubt about that. Yes, please. Like I told you, the major idea behind this exception is, you can understand the concept of it. There are only two main issues. Anything used for private or personal use is not allowed to be used. And second thing is, if there is a works contract or a construction which results in establishment of an immovable property, then it is not allowed for input tax credit. If a works contract service is used for, works contract, as you know, as far as GST is concerned, has become a service completely. So once a works contract service has been used for supply of works contract has been used for creation of immovable property, then it is not considered as a input service, for the reason that goods have been defined in this act. Goods have been defined as any movable property. There is no immovable property that can be called as goods. So any input tax also cannot include without a supply of goods. So supply of immovable property is not supply under GST. That is the very reason we have excluded this one. This is mainly for personal consumption. Here you can see a lot of foods, beverages, outdoor catering. Like for example, let us say beauty treatment. This is a very loaded term because a beauty treatment for an actor can be an input service. Because actor, he has to go undergo beauty treatment to give his output service of acting, or a beauty pageant, whatever. If let's say Mammootty here is acting, unless until he puts a makeup, he cannot come and act. That is the very reason it may be a loaded term, but yeah, it is up to us as implementation authorities to decipher it, to implement it, because if everything is plain and black and blue in the law, then there is no work for us here. The very reason we are here to implement law is that we will understand the provisions, we will implement it judiciously and justly. That is the main idea. Okay. There are everything you can counter, each and everything you can counter, that is this going to be used as input service, is this going to be there? Everything is there. It's up to us to do it in law. We are the implementation authorities. We have to take a decision whether it is exempted service or not, exempted input or not. Actually, this is it. I wouldn't say discretionary power. You just last line is very important here. When you such goods or services are used primarily for personal use or consumption of an employee, that takes away discretion from you. But whether this primarily for personal use or consumption, that is up to you to interpret. It is not discretion; it's interpretational power. I wouldn't call it complete discretion because you can interpret any way you want. For example, food and beverages is main bread and butter for a catering person actually. Okay, if his output supply is catering, then food and beverages cannot be denied as an input service. But if it is a factory, if a IT company is there, you have a canteen in that, you go and work as IT company and food and beverages is being supplied there. Input supply of foods and beverages cannot be taken as credit for that person. That is the main idea about it. Because that is used for a personal consumption of the employee in the factory. But for a catering company, it is the supply that he is making, output supply is making actually. Okay, that's the difference between all these things you can use, but it's up to us to interpret properly and establish the law about it. Then, as I told you, any goods or services acquired by the principal in execution of a works contract, because it is resulting in a immovable property. Supply of immovable property. Supply of immovable property is not even a supply under GST because supply of goods and services. Goods does not include immovable property. So it cannot be allowed to be this one.
In the present scenario, ITC on capital goods is allowed as per KVK Act.
Yeah.
In relation to construction of immovable property.
Yeah. No, but works contract is not anymore goods. It's a service. Okay. And service of so I'm speaking about input credit here actually. The output supply is the immovable property. The immovable property does not include, as per GST definition, goods does not include immovable property, which means an outward supply is not happening. You cannot take an input credit for that particular supply is happening. That is the idea about it. Because you have to have outward supply. As per definition of input tax, we have seen just below, there has to be a outward supply in the course of furtherance of business. Without that, you cannot take credit of that actually. That is the idea behind it.
So you are saying that in relation to construction of a villa or flat, under no circumstances ITC on capital goods will not be available.
If it is a works contract service input, it's an input of works contract. I am only speaking about works contract input actually. I am not speaking about anything else. If there is a manpower supply happening, that's a different issue. I am speaking particularly about works contract issues here, right? Then even there's no credit anyway. It's like blanket disallowed on terms of people who are under compounding or composition scheme actually, because they are not allowed to take credit. Simple as that, because they don't have eligibility for this one. And again, they have reiterated telling that private or personal consumption. To that, if a particular service is used for both private consumption and course of furtherance of business output supply, then yeah. Yeah.
I am using generators for the purpose of construction.
How are you taking it as input credit? That's the invoicing. It is more about the invoicing here.
It's only for the purpose of constructing villas.
No, that is right. But it's about invoicing. If you are including the value of generator in the works contract thing, it is not involved. But if you are telling it as a supply of another thing, it's based on the invoice. Who are you charging to and who are getting it from? Based on that. It's more about your own presentation there actually. If, or like what you say, if we have, that is our bread and butter, right? We have to go and demand something that person has taken wrongly.
So, but in the first contract,
Yeah.
the tax base is not the creation of immovable property, but when the materials are accreted to
No.
the immovable property, then the tax base comes.
I am speaking about the input service here.
Article 366, 29A, 6 specific areas were ascertained for the state to levy tax. In that, specific provision is for this works contract.
No. I am not telling levy of tax here.
Here, the
Just-
tax base is
Just a minute. Just a minute. 1 minute. I'll just explain you. I am speaking here about input tax credit, not about the output liability.
We are talking about input tax.
without output, there cannot be input tax.
Yeah, that is what I'm telling here. That is what I'm telling here because output tax is not here actually. Because output is a immovable property.
Works contract.
Yeah.
Please explain.
In first contract,
Yeah.
what is actually happening is,
Yes.
in the fixed property of land, suppose a building is constructed, the terminology is that the materials like iron, steel, cement, brick, etc. When it is used, the principle is that this material, that is movable goods, taxable goods are accreting to the immovable property, the land.
Yeah.
When such accretion takes place, that is the tax base. And finally, the end result of the accretion of the entire material is the formation of a finished item that may be immobile, that is like building. It doesn't mean that by utilizing this all materials, that is movable goods, then an immobile property is generated and this immobile property cannot be taxed. And this question was already approved by the Honorable Supreme Court of India in Lancet Supreme Court case.
No, there are two different people you are telling here. One is the person using the works contract, another is person supplying the output tax of construction immovable property. If the supply of immovable property is happening by a person, then it is not involved for him works contract. If he is supplying works contract, then his whatever machinery, whatever he is using, that will be inclusive. There are two different supplies here actually. A supply of works contract, a person will be eligible for it. But supply of immovable property, then he will not be eligible for it. There are two different supplies here, outward supplies here. That is the whole idea about it. This concept is electronic credit ledger. I would like to bring to notice some return concepts here because that has been used here. There are 3 returns. Okay, not 3. Actually, there's only one return with 3 components in it: GSTR 1, GSTR 2, and GSTR 3. GSTR 1 is relating to outward supplies. Okay, any person making an outward supply has to populate his GSTR1. That not, I mean, the nitty-gritties and the working of it will be explained by Ritik Pandey sir tomorrow. I'll just understand it so you can understand it. And GSTR2 will be auto-populated based on the outward supplies of others. For example, if my outward supply will be somebody else's inward supply, so GSTR2 of his will be automatically auto-populated in GSTR2. Okay, and based on the calculations of GSTR1 outward supply and GSTR2 inward supply, okay, the GSTR3 will be auto-populated, which is for tax liability. Okay, that will have three components in it: electronic cash ledger, electronic credit ledger, and electronic tax liability ledger actually. Okay, this the electronic credit ledger will be auto-populated based on the you have received whatever supplies you have received. Based on the say, GSTR2, if it is matched properly, then it will be auto-populated in the electronic credit ledger of yours. Electronic credit ledger is in the GSTN. It will be auto-populated and you can look into it. That is the main reason it has been brought into, because whatever ITC you are taking will be available there. And we are actually speaking about two concepts here: inward supply and outward supply. Let us discuss about that in detail, for the reason that inward supply means receipt of goods or services, whether purchase, acquisition or other means. This inward supply specifically is for only two purposes: for either taking of credit or taking of credit or in the return purposes. For GSTR2 it will be inward supply. Any supply of this concept will be inward supply for you. So you may have to claim the inward supply sometimes if the outward supply person has not given it to you. Okay, and the outward supply means again the same, whatever is used for supply, but it also includes a person who is payable, tax payable. It does not include a person who is paying under reverse charge. The reason being is that if my supply is reverse charge, I cannot include it as an output supply, because the tax is being paid by that person, so you cannot take credit of that. If my supply is going to be reverse charge, he is paying the tax, but if I put it as outward supply, it will be inward supply for him and he will be taking credit, assuming that I will be paying tax. But I will not be paying tax, it is the other person who is paying the tax. So he has to pay the tax and take credit on the challan, not on the invoice. That is the idea of this outward supply excluding reverse charge mechanism here. And output tax is also same. It is a charge tax, taxable like in input tax, same difference. And it is also applicable in IGST also. The tax, whatever you pay, CGST, SGST, IGST, whatever tax you pay is output tax. But it does not include a tax payable on reverse charge basis, because it is actually a reverse charge. It is not an actual output for you, it is input for you. That is the reason. So place of business is defined because it has to be defined in terms of usage of capital goods. Yeah, please. Yeah, please tell me. Oh, sorry. Then fine. What do you want me to explain here? Please tell me here. Okay, I'll do it. Sure, thank you. So here you are clear about inward supply, outward supply and all? I mean, do you have any doubts about that? An exclusion of reverse charge mechanism? There is, I think that should be clear about it. Yeah. There will be a GST tariff act actually. There will be a GST tariff act. So it will be explaining you clearly everything about that. Place of business, as you can see, is where the business is ordinarily carried. Okay, whereas a godown or whatever it is, or where he is maintaining his book of accounts, or even through his agent. Agent has been defined under this act. So place of business is where actually, in principle, a place where business is being held. That's it. So any capital goods of outward supply is goods. A capital goods can be taken credit only if it is in this place of business. Otherwise, you cannot take credit of that. Okay, and reverse charge mechanism, as you all know right now, is that the liability to pay tax has been shifted to the recipient of service from the supplier of service. Capital goods outside the business premises, you want to say? No, it is just like say any, let's say I am making a machinery. Okay, goods have been outside. I mean the capital goods outside, manufacturing is done outside. Okay, and the goods that have been manufactured in another premise has been brought here, and I am supplying this one. Okay, the supply from there to here is itself a supply. That is the very reason actually. The supply from that premise to this premise itself is a supply. Okay, so it is a capital good for that premise, not for this premise. That is the whole idea about it, because this person, he may be entitled to take credit, probably he may be the one buying it and giving it or whatever it may be actually, but it is in that premise, he can usually, it is a, it is a premise for that person, so he can take credit of it. This person will pay tax only on whatever input he is taking out of it. If this person has declared that as an additional business premise, then it will become a job workers premise which he can bring it out inside. Through an agent actually, if he is not an agent, let us assume. Hey, generally everything is tried to be included, but if it is extremely kept outside, if it is kept totally outside, like for example, let us say electricity generation. Okay, electricity generation is being done, but it is not entirely used for captive purposes. Then that particular thing, even if it is outside, when it will not be considered as a capital goods for him. If you supply it to somebody else, like a wind power mill, exactly. If it is being supplied for government also, then it will not be coming under capital goods for you, even though you install it and you paid for it actually.
What about mining? The mine will be far away from the manufacturing.
Yeah. Manufacturing?
Where the cement is manufactured, the manufacturing unit will be in one place.
No, we don't have to worry. The mining premise itself should be a place of business and it has to be supplied to this factory because it's supply, not manufacture is not this one.
What I say is, the factory is in one place.
Okay.
The mine is in another place.
Okay.
You need capital goods at the place of mining.
Okay.
This is not in the premises of the factory where it is manufactured.
Why is manufacture even a problem here actually? Because we are speaking about
Business premises.
he must see the thing is if he has a separate premise, he can make it an additional place of business and use that credit. If he can declare it as additional place of business and use the credit. Or what he can do is he can get registered separately and he can take credit of it also. That is how it is. Because that is business vertical separately is allowed us in the state also you can do it. So it depends on it. Auto population will happen, but the payment has to be done by the person in GSTR 3. Sorry? Yeah, only 2 months. After that, your credit will be denied to this one, other person. Yeah. Sorry, I'm not able to get it. Yeah.
Say a capital intensive industry.
Okay.
At the initial stage, the credit is now capital goods credit is allowed 100%.
Yeah.
Not 50%.
Yeah.
So in that particular case, if the credit amount and the liability cancels out each other, then there won't be any electronic cash payment.
No, but the payment has to be authorized by this person in the GSTR 3. No, even by debit of credit register, he has to authorize it. Debit has to be there. Only auto population will happen till your eligibility of credit will be shown. The availment is your right. You can avail the credit or you can use the cash for payment. It's up to you. No? There's no restriction on you to use only cash or only credit. You have to show a debit of the cash ledger or the credit ledger. Other than that, it cannot happen automatically. That much. So this is a very important concept here because you will come to know later when we are speaking about IGST slide, we are touching it up. This valid return, filing of returns with the payment of duty is very important for fund transfer to happen. Otherwise, the whole system of IGST where it relies on the fund transfer from center to state or state to center, it will not, center to center itself for that matter in terms of CGST to IGST cannot happen after that, without that. Okay, so valid return is very important in this concept. If a person does not file a valid return, what will happen, the consequences will be explained by Ritvik sir tomorrow when he comes and takes it in detail. Okay, who is eligible for ITC? This is where we start actually about ITC. Any registered taxable person is eligible for ITC. This is the first thing which we all know by any act it will be there. Any registered taxable person will be eligible for ITC. And the second one is if a person becomes liable for registration. Like in today morning they must have taken you over the liability of registration. 30 days from where he is liable for registration, he should have applied for registration. Then, if he has applied for registration, then what will happen is, this word is a very, it will be called from goods held in stock. Okay, goods held in stock is the input credit of inputs assets or the inputs used in the semi-finished or the finished goods available in your stock. Okay, those credits will be available to you for taking the day, as in the day immediately preceding the payment of tax year. See, that 30 days liability is for registration, but this Taking of credit will come only when you are eligible to pay tax. You cannot take because you are 9 lakhs, 9.5 lakhs you are getting in next 30 days. You have taken credit on not on the 30th day, but you should be taking on the day when you are eligible to pay tax after 10 lakhs. Okay. Next one is when you take voluntary registration. There is a provision in yeah.
Now a person who's crossing the threshold of registration, we take registration, he reaches 10 lakhs. So after 10 lakhs, he hasn't paid any tax. Now on his inputs lying in stock, as on the day, currently also we permit that. But that's on the premise that goods in stock when they are sold. So here too the same concept is continuing, the supply.
Yeah.
The same,
Yeah, it's continuing. Yeah.
so there's absolutely no difference.
Yeah, the same thing. It's whatever is available in stock as input or input credit of inputs used in the semi-finished or the finished goods is available for you to take credit on the day when you immediately the day preceding the day when you are liable to pay tax as a person. This is as simple as in any this one cat also. And voluntary registration is allowed here, but voluntary registration does not mean only registration. It also means payment of tax. If I take registration, I have to collect tax, then I have to pay tax also. Okay. When the payment is happening, then on the day when he is opted to take voluntary registration, the day preceding that day, whatever is available, goods held in stock. We don't have to define goods held in stock after this because let's be clear that inputs as such and inputs contained in semi-finished and finished goods. So goods held in stock is the term loaded here. This is the immediately day preceding the registration is eligible for taking all the goods in credit actually. And for a person moving from switching over from to normal scheme from composition scheme, then the day prior to the day when he is switching over, then he is eligible for that stock also. It is actually explicit in law if it is explicitly written as to how much you can take, that's it. It's making our lives a little easier, yeah.
In respect of suppose you put an offense case
Yes.
and you invoke extended period, would that person be eligible for input credit for the entire period?
If we tell that he is liable to pay tax,
Yeah.
yeah, then that is where the problem comes with he has to apply for registration within 30 days of his liability. He may not be given registration. Yeah, then he may, yeah, this is little interpret. We may not allow it, but the courts may tell that he is eligible and he may allow it. Yeah. The courts may allow it. That's a different issue, but as per law, we have not provided, we have told that he has to take it. Okay, we are not allowing anybody to take such credit even in the law. We are restricting in the law by giving some restrictions, but yes, courts may interpret differently and they may allow that person to take credit also. Yeah, this is the major difference in terms of capital goods of in central VAT law and in some states. I'm not sure about Kerala, but all the credit, entire credit of SENVAT available for capital goods is or ITC is available in capital goods at one go. There's no restriction of 50% as we see in central VAT law. There are some 4 main conditions in which the features which it has to be available for a person to take credit. Okay. The first one actually is that he should be in possession of a document, proper document. Proper document can be invoice, a challan or whatever, it can be anything. In reverse charge you have a challan, but in normal thing you have an invoice, it could be a bill or anything for that matter. Second thing is he should have actually received the goods and services. All these conditions should be satisfied. And third one is the tax that is charged on the particular invoice should have been paid to the government, which is state government or the central government, whatever credit you are taking for, and he should have furnished the return. Yeah.
Instead of paying the tax,
Yeah.
if he is adjusting against input tax liability, then can we say that he has actually paid?
No, no.
The difference in payability and liability. Actually paid means instead of paying, he is adjusting that OPT in his liability.
You are telling input tax liability means ITC is using input tax credit. That's what you mean to tell?
Actually paid means
Ah.
he has to pay tax to the extent
That the payment of tax actually will be taken. I think I'm not sure whether taken. Payment of tax includes tax paid through cash and through credit. It does not. There's no problem with paying in cash or in credit. It can be paid by any way you want. But tax has to be paid either by credit or because he's eligible for the credit, so he can utilize the credit. There's no problem with that actually. And he should have furnished the returns. These 4 are very important for a person to take the credit actually. And again, here currently we don't allow a person until he furnished the return to take law as per the investigation angle is concerned. But all the courts have told that if he has got stocks in hand in his book of account, he has got the credit available, then he can take credit. Again, he has furnished the return is one of the criteria we have brought in, it may not stand the test of law, that's a different issue. But we have, as a model law, we have tried to incorporate everything possible. He should be following every procedure, only then he will be getting the input credit. That's what our whole idea about this allowing of credit in terms of furnishing of returns. Yes. That will come in later. That has been also incorporated. See, the thing is, he has to be furnishing return to be eligible to take credit. Once the output supplier is filing it, it will be auto-populated. You accept it, you will take credit. The moment the credit will come inside you, but within 2 months, within 2 tax periods. Okay, that will be explained by Ritvik sir tomorrow. Within 2 tax periods, if the fellow has not paid the return, paid the duty, then automatically this tax will be disallowed. So that is why your eligibility of credit will come in the moment you furnish it. But the thing is, it will be disallowed later automatically by GSTN itself.
When you say it's auto-population,
Yeah.
so it means it will be based on the GSTN number.
Yeah. Can I please tell? Can I please know one thing? This will be detailedly explained tomorrow by Ritvik sir. Let us keep out of that return discussion, because this is about input tax credit. Return. That's why I told her it would be better if I take this class after the returns has happened. But sir will explain it tomorrow. To be clear with you, it is based on GSTN, okay, and the invoice numbers, dates, quantity, everything populated in it. But it will be explained by Ritvik sir in detail tomorrow with the presentation. It will be very clear to you that time. And if the goods are received in installments or in lots, then when the last lot is received, only then you will get the credit. Because there's one condition which he has received the goods and services actually. The invoice is there, the goods have to be received, only then he will be eligible to take the credit. Here.
Each lot is covered by a separate invoice.
Fine, that is not lot, it is just a, that invoice has been delivered. It is not called, you may have agreement differently. As far as we are concerned, the document prescribed for taking credit is invoice. That is important for us, nothing more than that. For that invoice, it will be eligible. No, that is one provision which we tell that if there is an ineligible credit availed, the demand can be there under section 51 of this model GST Act. So everything will be covered under that recovery. If we have given this provision as a rule that only when the last lot is received, you have to take credit. So probably if he has taken credit before the last lot is received, right now, like what we do now, he may be eligible for the credit because while time of investigation, he would have received all the lots. But so probably we may have to demand interest between the period from that time to the period when he has received the last lot. That is up to us as during audit or investigating agency to ask for it specifically. Because even in Rule 6.3, when we do for apportionment, we do the same thing actually. No?
Suppose he has taken an ineligible credit, that means an item which is not...
That should be disallowed entirely. That is only, I am coming to that, penal provision is there. It should be demanded under section 51 of Model GST Act. As a recovery, like in service tax we have section 73 and in excise we have 11, similarly. And similarly whatever demand is under VAT law. So this is one provision which I have given specifically, bill to ship to model, where if the billing has been done to me and the shipping has been done to another person, it can still be assumed as taking credit by this person. This is it mainly. Where the goods are received by this another person, it can be taken as credit. By way of transfer of documents and all, it is considering the complexity in trade these days. These things are also happening. It has been envisaged in this law. The implementation of it will create little bit issues. I understand that, but that will be dealt with by during the time of implementation, because the bill to ship to model is now very much in vogue. So they have incorporated that in the act.
Do we have to physically verify all the invoices input credit?
No, actually everything is available in GSTN. There is no need for a physical invoice to be available to you. In GSTN, when you ask for, that's what that is why it is. That is why we have given right now the CETS classifications. So generally, you will understand what is the classification given for that particular invoice. So you may be eligible for it. Is what the idea is. Okay. Right. It is not physical verification. It is available in this GSTN. So you can opt for whichever to be verified. Right now, what you do in audit, use random checking or whatever it is possible, 10% sample check, anything you can do it actually.
This bill to ship to, who is eligible to take
The billed person. Billed person.
Now what happens is with this a particular item is supplied to a job worker.
Yeah.
Okay, I mean, I need it for something that I manufacture. It goes, but it to be shipped to the job worker. The job worker uses it, he creates a new product.
Okay.
And then that finished product comes back to me. In such a situation.
The provisions for job work specifically that we will be dealing on Thursday, which will have some time limit. If it is a capital good, it should be 2 years. If it is a no,
Things to be returned.
yeah, you can.
The credit, I'm talking about the credit facility.
Yeah, the credit, that's all. Even everything will be dealt in job work side actually. When you're dealing with job work specifically, we'll do that bill to ship to model in job work actually. That will be more easier way of doing it. Now here we are speaking about reversal or transfer of credit. When there is when there's an amalgamation or merger or sale or anything happening in this, in any business, the credit will be transferred only when the liability is also being transferred to him. When the liability is not transferred to the concerned person, it should be explicitly mentioned in the agreement that the liability is also transferred. Only then it has been allowed, because there's a lot of cases we are having where they tell that only credit has been taken by the person, but they tell liability is not because of the agreement is specifically mentioned like that and all. So we are specifically told in the act that the agreement has to specifically tell that the liability is also been transferred, only then the credit will be transferred to the concerned person actually. Okay, and sorry. No, it isn't. Yeah, the time limit here is 1 year. Within 1 year of the date of invoice, you will have to avail the credit. If you don't avail it, it lapses. You don't have eligibility to avail the credit after 1 year. And there is one thing which we tell that by September of the next financial year, you should have finalized all your returns. Or any returns if you have to do, if you are doing any, tomorrow they will tell you and explain you in returns what is to be done. In September of the next year, you will always have, you can have chance to change, not revise the return, but it is only a small correction or here and there, debit note, whatever it is that you should have raised within the September of next year. Okay, so within that time you should have taken the credit, or by the time of filing of annual returns. That is last date for filing of annual return is 31st December next year. Okay, when all these things, three things combined, reading tells that it is either 1 year or September of the next financial year or the filing of annual return, whichever is earlier. It will come like that. What if you are say taking credit, if you have taken an invoice on 31st March, okay, the 1 year period will not be applicable for 31st March invoice. It has to be within the September of that month. If you file the annual return before September, which you can do, then from the date when your annual return is filed, that your liability ends there actually. You cannot take credit after that. It is done with that. This is mainly to keep that particular year's transaction over, because our demand in under 51 is basically 3 years or 5 years with the completion of adjudication orders from the date of filing of annual returns. So we have tried to they cannot change it after that. No, actually. That is the main issue about it. Again, when there's a business and non-business purpose, proportionate allowable is there. And similarly, when there's a taxable supply and a non-taxable supply, we have a proportionate allowable. Here we have to understand this, including non-taxable supply includes exempt supplies but not zero rated supplies. The idea behind including zero rated supply is that export is zero rated. The person has to be allowed to take credit for him to apply for refund or something, issues like that actually. Zero rated supply is, he can take credit on zero rated supply but not on exempt or non-taxable supplies. And in terms of capital goods, if you claim depreciation under income tax law for tax paid on the tax component, then the credit of that input of the capital goods cannot be allowed, which is available in our central VAT law right now. I think it must be in state also. This again, if a person switches from normal to composition, if a person switches from normal scheme to composition scheme, then he has to reverse the reverse or pay the available ITC in your electronic credit ledger immediately before going on. Then similarly, if a person is in terms of capital goods, the reversal of credit, if a supply of capital goods is happening, then the person should actually pay or reverse the amount of duty on the percentage decrease. Like there will be percentage decrease which will be prescribed, which has not been notified yet, which can be per year how much depreciation the percentage points will be prescribed, and based on that percentage points he can reverse the credit of a number of years of usage or on the transaction value, whichever is higher. It should be either transaction value or the depreciation percentage points, whichever is higher. That is the thing for capital goods. And recovery, like you will ask me a question, what is to be done in terms of wrong recovery, wrong availment? Everything will be under section 51. Section 51, which is the demand section under GST, Model GST Act, it will be under section 51. And this is what sir will be explaining you tomorrow in detail. If only provisional allowing of credit for that particular month will be there. For example, if a filing of return has happened and I have uploaded my outward supplies, other person has taken his inward supplies, but the matching has not happened. By my outward supply and his inward supply doesn't match. Okay, then he is allowed credit for that particular period. Let's say, for example, for the month of August, I will be filing by 20th of September. So I will be allowed in the month of September, I can utilize the credit, or then the next period. For example, the next return will be filed by October. Okay, within the October 20th return, I should be able to match it. If I don't, then it will be automatically disallowed by GSTN. That is why we call two tax periods, because the return credit eligibility for August will be disallowed by October, so we call it two tax periods. But effectively, it's only one return that is being filed, which will be explained to you tomorrow in detail by Ritvik sir. He will explain you that one. And the matching and all will be explained in returns. It will be more clear for you when you go to the returns class. It will be very easy for you also. And the ITC is self-assessed, as usual, self-assessed in the electronic cash ledger, credit ledger. And the most important thing here is that it is explicitly mentioned in the law that ITC can be used only for payment of tax, not for interest, not for penalty, not for any fee that is applicable, anything. Only tax credit can be used only for payment of tax, either whatever is eligible to be paid as tax. That's it. There's no other credit allowable as this one. This one, I think all of you are almost clear about it. Here, IGST credit can, CGST credit can be used for CGST and IGST. And SGST credit can be used for SGST and IGST. IGST credit can be used for IGST, CGST and SGST, in that order only. No other orders. You cannot cross-utilize it. And probably they are trying to make GST and not allowing that utilization also to happen actually. Yeah.
So you will be dealing 3 electronic credit registers.
Yeah. Whatever is the, electronic credit ledger will have separate accounts for SGST credit, IGST credit, CGST credit. It will be separately maintained, and those will be utilized only for those purposes. It will be clearly explained there, this one. And the idea behind allowing IGST first, CGST next, and SGST next in that order only is that there should be minimal fund transfer between the center and states or state to state actually. Because I will be explaining you IGST in the afternoon after in this one. You will be, the payment of the fund transfer has to happen between central government to state government or state government to central government. That should be minimal, it should be kept at the minimal level. That's why this hierarchy has been followed. It could have been anything, SGST, CGST, IGST also. But it should be minimal, that is why it has been kept like this in this model. And refund of unutilized ITC is possible only in two circumstances. One where exports are being made and the zero rated supplies, and second one, and when exports are zero rated, it's allowed. And second one, when the inverted duty structure happens. When your outward supply is tax less than an inward supply, then you can claim refund. In all other cases, if you have any ITC pending, then it is actually carried forward. There's no refund except for these two cases. Yeah, refund is allowed of tax in every other case, but for ITC it's allowed in only two cases. Yeah, there is provision. That's what in transitional provision we had discussed that one. We had asked the same question while we had trained. There is provision for rebate also, but that has been implicitly mentioned, not explicitly mentioned here in the refund. It will be explained in the refund procedure clearly. Yeah.
There is a provision that you may not be able to avail the credit within after 1 year.
Yeah.
How come you carry forward?
No, you have availed the credit in your account. This is about refund actually, na? This we are speaking only about refund. Refund can be taken or not taken. You can, no, you can keep it within your account. You can utilize it for later payment. See, once you avail it, there is no problem with your utilization later. The availment only time limit. Utilization, there is no time limit. Once you avail it, you can always utilize it later also in your account. There is no problem with that. The availment, first availment of a credit, let's say 100 rupees is a credit that I have to take it 1 year from the date of invoice. But that 100 rupees, I can utilize it even after 3 years if it is in my account. There is no problem about that. Because that is also mainly it will be verified, it should have been verified long back, na? That particular credit would have been verified long back. See, even in the electronic credit ledger, there will be check boxes, whether you would like to avail this credit or not. That is, there will be check boxes to avail the credit and not avail the credit. That's how it will come. Electronic cash, that's what in returns it will be explained in detail by Ritvik sir. There will be clear, you have to go and check whether you are availing this credit or not. It will automatically be populated in your account. But you may think that it is not eligible input for me or eligible input service for me or eligible capital good for me. You can always go and deselect the thing. Yes, sir.
Currently in this semi-credit rules, we have a provision whereby where reverse charge is involved.
Yes, sir.
You can get refunds where there is huge accumulation of credit on account of reverse charge. In the the model law there is no.
No, sir. Only these two, what we discussed, those two are the only provisions where you can get credit of ITC. If there's a credit of refund of tax based on wrong payment, excess payment, that's a different
But reverse charge,
credit on the
those are import services.
credit accumulation on the inverse charge. That is not allowed here. It is not allowed in this one. Sir. And these are the transactional provisions mainly. These are the most important provisions because for the first 3-4 years of our transition, we will have problems with these provisions only. We will be fighting with the trade for only these provisions mostly because we will look into the later things after coming only because the entire credit that's available in their ITC or SENVAT will be allowed. SENVAT will become CGST, ITC will become SGST. It will be straight away allowed as per this one. Only there are some conditions that has been set. Okay, it should have been allowed under the earlier law. It should have been allowed under. It should be allowed under the present law also. Okay, most probably if it is allowed in the earlier law, it will be allowed in the present law because our present law is very open. It allows almost everything except for private use and specific exemptions that we have given. So if it is allowed, it should be allowed in the earlier law. It should be allowed in the current law, and then any recovery of wrong availment of SENVAT even before the period should be under the current law, under the GST law. Okay, recovery will happen as per the GST Act, not as per the previous Act anymore. And similarly for capital goods also, it is it is mainly for capital goods which is not availed due to restrictions. 50% cap is there. For this year I have availed 50%. For next year I have to avail, but I have not availed it. But he can still take the credit of that on that particular day, on the day when appointed day when the GST comes into effect. So you can take the only again the same thing is that it should be allowed as input credit in the earlier law, current law, and any problem with recovery should be happening in the as per the current law. Okay. There are chances that a particular supply of goods or service was not taxable under the previous law, but is taxable under the current law. It is possible. So he has to take registration newly. He was making. So in that case, again, goods held in stock will be allowed to be taken as credit. Goods held in stock will be allowed to be taken as credit, but that also will come with certain conditions only. Those conditions will be, again, it should be under earlier law, it should be eligible for taking ITC under earlier law. The only thing is, because he was not a service provider or a supplier of goods or this one, then that is the only reason he is not given, he is not taken ITC. Otherwise he is eligible for taking ITC completely. That should be there, and he should be eligible in the current law. He should be in possession of invoice, because that is a very important document only which we can verify this one, and any recovery should be done under current law because of this one. Okay, clear about this? So again, similarly, any person wanting to switch from composition scheme under the earlier law to the normal scheme under the current law will also have the same issues, same provisions of transition, no problems with that. Now, if a person is switching from normal scheme under the earlier law to the composition scheme under the current law, then he has to reverse or pay the amount equivalent to ITC on goods held on stock. Okay. If there is any other ITC available in his account, it will lapse. He is not eligible for any ITC. His ITC credit, so credit ledger should always be zero in terms of composition dealers. So here comes this one. If there is a refund arising out of the earlier law, the refund will be dealt as in the earlier law. If a refund is arising out of earlier law, it will be dealt as in the earlier law. The current law will not come for the refund procedures till the date of from the appointed day. But if there is a problem of credit, a credit dispute is happening between the taxman and the taxpayer and the government, if it is settled in the favor of the taxpayer, if it is still in the credit is allowed, the credit will not be allowed. It will be refunded in cash. It will be given in cash to him. If there is a dispute that is arising out of a credit ineligibility and it is settled in the favor of taxpayer, it will be refunded in cash. And similarly, if it is settled in favor of the government, then it will be recovered under section 51 of the current act. Okay, it will be recovered as per the present law. Clear? Then this is about an agent taking credit. A agent can take credit provided the principal is not taking credit. That's the whole idea about it. It's explained in detail. But they have to file some returns. There are some procedures prescribed. They have to file documents properly. They have to have details of stock lying with the agent has to be declared, and all those things have been mentioned. And again, the 1 year clause is already there. Within 12 months, it has to be taken, credit has to be taken. So this is regarding, yeah, this is regarding the transitional provisions. Sorry?
Interest is chargeable.
Yeah.
Suppose I am availing
Utilization, it is utilization. Now it is almost every law it has come into settlement that it is utilization. There's no problem with that actually. Any more questions regarding ITC? No, there is no forms. He has to declare on his own. No, which one? This one. No, they both have to declare together to the concerned taxpayer. If both are in the same state, they will be declaring to the concerned taxpayer in this place that this is the agent and the principal will sign probably in the same thing. It is this one. The form has to be, only it is in the transition thing. No? Otherwise, it will not be a problem. It is a one-time affair. So there is no forms specifically for that actually. There is no forms regarding the new GST. Only that the transitional provisions, because we don't know whether this principal has been giving it to this agent, they have to declare it together that this is my thing in the agent. He can take credit. I don't want to take credit of this one. He can give a declaration. That's it. That's the only declaration.
For example, in a TV dealer in Kerala,
Yes, sir.
during the introduction of GST, that is 1/4/2007,
Yes,
17,
yes, sir.
has got 100 TVs at opening stock.
Yes, sir.
So what I presume that the opening stock consists of a portion of state tax, that is ITC, input tax, which has not been taken out, and a portion of central excise duty also, SENVAT duty also.
Yes.
Sometimes he may be doing some kind of annual maintenance contract, I don't know about that. A service, unutilized service opening balance also there. So 3 opening balances are there, against which he may be having CGST and SGST. How this is going to be adjusted? This is what the trader's point of view.
Yes. So as far as SENVAT is concerned, that will be actually, when VAT comes into play, it will be on the SENVAT. It is on the excise duty. So that there's no problem of excise. There will not be excise duty also credit for him. It will only be SGST credit for him.
So there is no credit for his opening excise duty, which is inbuilt in the TIT.
It is inbuilt. It is not in the invoice explicitly. It has to be. He has to have a document proof for that actually.
No, in the sense that he is now collecting output tax also on the GST. Earlier it is not there. For example, during the March, he is only selling and collecting only output VAT.
Yeah.
Now he is supposed to collect CGST as well as SGST on that. That means a corresponding opening stock input SENVAT is also there.
No.
Whether it should be adjusted.
No, but that will not be done because it is not possible to establish a one-to-one link in paper.
Okay.
As far as SENVAT is concerned.
Okay.
SENVAT, there is no doubt because he is a dealer. Okay. He is not registered with excise at any point of time. So he will not be getting any credit because
but the question is,
Yeah.
but there is a tax element which merges inside, which comes to a conclusion.
these are transitionally, and he has to bear that particular thing actually. That is the idea about it, because he has always been bearing it for some time now, and that this particular transitional period he may bear it actually.
What he bears during the up to 31/3/2017 is entirely different. Now he is collecting output tax also.
Yeah, that is fine. That is still okay. It's fine about that. As far as services is concerned, if he has taken the credit already, it will also be allowed to be taken forward to it actually. As far as services is concerned, sir. Yes, sir. Yes, it's an input. It's an input asset. For he's a seller, he's got to finish this one. Manufacturer, if he can distinguish between a SENVAT and a VAT, normal VAT and a SENVAT, if he has 2 separate documents, he is eligible for the credit.
So a different opening stock adjustment, input credit adjustment is there for a trader as well as manufacturer during the transaction.
So because only one thing, because the document has to be available. A document in which he is taking credit has to be available to him at that point. That is the only reason for that actually, sir.
See, what we have done during the transition from sales tax to VAT, we have made calculations.
Okay.
In that we said that there will be a 10% input of sales tax will be there. Okay. So some equation we made on the basis that he has allowed. Now he is a loser. A trader is a loser. Am I right or
Yes, sir. To an extent, yes, he will be a loser. That's, that they have apprehensions.
Manufacturer is a gainer. A trader will be a loser.
They have entire apprehensions about this entirely in this one. So they have already taken up with the committee and they are discussing this issue again in detail. The only earlier regime, yes. with SENVAT in the earlier regime, so he doesn't allow it. That is also there. So, anything more?
Prior to the cutoff date,
Yes.
will continue in that eligibility will be passed on, in the subsequent period. So when any goods embedded with the cost of your excise duty, etc. is there, and from 31st March on a 1st April, when that commodity is getting sold off, in fact, the trader recovers whatever the cost. So I don't think the trader is losing on 1st of April.
He doesn't lose per se, sir, because he is recovering it. But the rule actually is credit taken cannot be allowed, sir. Because the reason is that it is in the previous regime is
fine.
not.
So,
The credit taking.
my point is that there should not be an impression as if a trader is losing
In
because
comparative
it
manner.
is not explicitly mentioned there.
Yes. Because it was not available to him in the earlier regime, it cannot be available to him in the current regime. That is the whole idea about it actually, sir. And he doesn't have a document for it, sir.
It is said that the ITC on capital goods,
Yes.
in order to avail that credit, those items must be used in the premises of the business.
If he is supplying goods, sir. If he is a supplier of goods.
Okay. In that case, what will be the case of a delivery vehicle?
Which one, sir?
If a delivery vehicle is used in order for his
Yes, sir.
sale, can he avail?
That is what told. That is what specifically mentioned in this one, sir. Used for motor vehicles used for, that is separate. What you are telling is about services which I have told specifically, sir. Sorry. The capital goods don't implicate it. Capital 2, section 2 of 20. Section 2, 20 subsection. Yeah. Please. This is separate, sir. This is completely separate. I am speaking about motor vehicles very separately. Only those things which I have defined here should be used within the premises.
Okay.
The other things I am speaking separately, which can be used by anybody for anything, that is separately discussed here.
Okay,
That is a motor capital good separately, sir. See, what do you mean by CST? I am not able to understand in this one. SGST or mean?
SGST or CGST or IGST. It will be happen. A capital goods which is used for manufacturing a commodity which attracts, sometimes it may be attract CGST or IGST or SGST.
Yes.
Anyway. But what is apportionment? Apportionment of the tax on capital goods, whether it is against SGST or CGST or IGST.
So
How can it possible?
you are speaking that supply can be IGST, SGST or CGST, am I right, sir?
Supply.
No, there is no problem with that because whatever we have received, if the capital good is received from outside the state, it will be IGST credit for him. And he can use it for payment of IGST, CGST and SGST in that order. If capital goods is received from the state, within the state, he will pay CGST and SGST on that, and for CGST he can use it for CGST and IGST, and SGST he will use SGST and IGST.
While we purchase the capital goods, the capital goods also attract SGST and CGST.
Yes, sir.
So it is on that basis we can be apportioned, or other we take it en bloc as.
There is no need for apportionment because his supply is different, sir. His supply, he can utilize the credit for, we have given a way how to utilize the credit.
Input tax is available only on the manufacturing goods is supplied. That's the point.
Sorry, sir?
Input tax credit is available on the supply side.
Yes, sir.
At that time the apportionment is, how is the apportionment?
There is no need for apportionment there. That's what I am coming to. There is no need for apportionment there because the credit taken is either CGST or SGST or IGST. Yes, sir. He can utilize that credit as described in the
first IGST, first SG, against which?
That's
SGST
what,
or
that is what, if you have a SGC, if I buy a capital goods of worth 100 rupees, I have 10 rupees of CGST and I have 10 rupees of SGST. Whatever is my output liability, I can use it accordingly. Whatever I want, it's my right to use it actually, sir. It is in the electronic credit ledger. I will use CGST for payment of CGST. That's it. If I'm going to pay CGST, I will utilize that actually. There's no problem with that. The input tag, either it should be IGST or CGST and SGST. That's it. So he can utilize it accordingly.
Input, whatever may be inbuilt excess duty is not being set off against opening stock. There are chances of price increase.
Price increase.
For the particular opening stock, there will be a difference. Am I right?
Yeah, quite possible.
Because, so for my suggestion, I don't know whether the even for a trader also, there is an inbuilt irrecoverable
SENVAT amount.
SENVAT credit is there in the opening stock. Based on some proportion, he should be given some kind of credit.
Then the law has to be amended actually, sir. Yeah. You please give a suggestion. They will be taking into account actually. No, no. You can please give suggestion also. They will be taking it away because this has been. See, when Upendra Gupta sir took a class for us in master trainers, he has only one. He told only one disclaimer. Never ask only one question why, because why is not anymore discussable. It is what it is there. That is why it is there actually. Because they have been discussed with some 25 brilliant minds of this nation have sat and discussed and decided that this is how it should be. They must have envisaged all the provisions and done it. Yes, there may be here and there. No law is perfect. It is going to be attained perfection, and so such a loss will always slightly be there, but you cannot take it as a loss because anyhow he is going to recover it, like what he told, he is going to recover it from the customer. He is not going to leave it into his personal loss. He will increase 5 or 10 rupees to his customer and recover it from him. That much he will, and if he is not taking credit, he will recover it from the customer actually.
No, the trading communities now they have kept the zero level tax stop at the end of this.
That is better for them actually. That is better for everybody together. That is how it's better. Yeah. That is better for them always.
Of the model law provides that credit cannot be availed up to 1 year.
Yes, sir.
But actually on reading the model law,
Yes.
I don't think there is such a restriction enshrined in it.
Which one, sir? In the Act.
Yes. See.
No, that is, it is there actually. I must have to read.
No. See.
No, at expiry of 1 year from the date of this one.
No. Yeah, that is there. For what condition?
What condition, matlab? I am not able to understand.
This 3A,
Yeah.
your credit subsection 1 is there. 3A doesn't refer to subsection 1. Only subsection 2, 2A and 3.
Yeah, if there is a wrong mistake in drafting of the law, you please intimate the drafting committee to your commissioners. They will be taking into account. Sorry, but the intention of the law is what we have told here.
See, I request all the members here to read section 16, 3A, which imposes a restriction. And I don't think that restriction is applicable to every SSE. Section 16, 3A of the model law, it reads as, a taxable person shall not be entitled to take input tax credit under subsection 2, 2A or subsection 3 in respect of any supply of goods and or services to him after the expiry of 1 year from the date of issue of tax invoice relating to such supply. But 2A and 3 doesn't speak about an ordinary SSE.
It speaks about taxable person.
No. The
section
16(1).
Section 3A speaks about taxable person. Anyone who is liable to pay tax.
A taxable person shall not be entitled to take input tax credit under subsection 2A. The conditions are in subsection 2, 2A or subsection 3.
Yeah.
In respect of, because I have a little doubt over there.
Yeah. If you feel that the drafting is wrong, you can intimate them accordingly. Yes. But the intention of the law is what we had told actually here. Yes. The intention is very clear. Yes. Nobody can take credit after 1 year of the date of invoice. Yes. That is the intention of the law. Yes. If a drafting there is some small mistake here, you can please intimate the model drafting committee that they will be doing about it.
One.
I mean, see, the one is not, probably if there is a mistake in the drafting, you please intimate through a commissioner that they will be accepted. But the intention is this one. The entire, there's no credit to him after 1 year. That is the intention. There's no doubt about the intention of the law.
Yes.
Okay.
Okay. Thank you, sir.
Yeah.